This is The Way I See It
Okay?
with Steve Reitmeister.
Normally I'm getting at long-term investing has greatly changed. Well, I should. I'm putting my money where my mouth is.
This now is the second installment in a series of commentaries that Steve has prepared covering the 4 factors behind the Zacks Rank. Today, Steve is going to go in depth on the Zacks Rank factor of magnitude in order to help you profitably employ the Zacks Rank stock picking system for yourself. So, Steve, let's get right to it. Magnitude.
Magnitude. Let's knock out the Webster's Dictionary definition of what magnitude is, and then we can get into the real good stuff of how you use that to pick better stocks. And so, as we see here, magnitude is the size of recent changes in the consensus estimate for the current fiscal year and the next fiscal year. Some people talk about this as being the trend in earnings estimates for a company. That's another common understanding of it. But it's the size of the recent changes, or the percentage size. We covered this last week. I'm going to do it real quickly here again. Because we're talking about percentages, so going from 5 cents earnings estimates to a 10-cent earnings estimate, that's only 5 little cents, but that's 100% change. Whereas going from $1 to $1.05, that's the same 5 cents, but now we're only talking about a 5% change. Which has the greater magnitude, which has the greater weight and bearing on the stock price, is that 100% movement. That's what really matters when it comes to agreement, when it comes to magnitude.
Okay, yes, agreement we've covered, right?
Yeah, I get them often confused, but at the end of the day, I know how to use them all.
So why should investors pay attention to this concept of magnitude of earnings estimate revisions?
The quickie version is you can say that the percentage change in the earnings estimate is going to translate into percentage change in the stock price. Okay, that's the quickie version. So earnings estimates go up by 20%. Very likely the stock is going to move by 20%, go up by 20% as well. Mm-hmm. Why is that? Beating the dead horse once again, but we got to go back to the basics. Earnings estimates fuel fair valuation models. Fair valuation models that are used by the institutions who have the big money. If they see a 20% increase in the earnings estimates for a stock, it's going to increase their perceived value of that stock by 20%. They're going to throw more and more money at that stock, and most likely over the next 4 to 8 weeks, that stock will move in the area of 20%, and that's why magnitude is so important.
All right, so do us a favor, show us some examples of what both good and bad magnitude looks like. Again, because it's such an intangible, it's better if we could visualize this so our viewers can spot some similar attributes.
Yeah. First, got to make sure everyone knows how to get to the estimates page to see that for their stock. So go to any quote page on Zacks.com. You're going to see a drop-down menu. You click on that. You have all these different options to choose from. Click on estimates. It's highlighted in the blue. That will take you to the estimates page. So I'm going to talk about some stocks that we talked about last week with agreement, and just continue to take the story forward. So here we have a Zacks Rank #1 stock, First Solar. We put our attention on the magnitude section. Now, as I said, a lot of people talk about this as the estimate trends section. Taking a look at the current year. 90 days ago, the investment world expected First Solar to earn $2.77 in this year. 30 days later, they were looking for $2.89. That's a nice little increase. Another 30 days later, they were looking for $2.92. That's moving up. Now, 7 days ago, they were looking for $3.53. Oh, we just made a significant jump there. And now the world is looking at $3.61. I mean, I couldn't have mapped out a better one. In each subsequent period, there's more and more analysts are coming up and say, boy, there's more and more good news on First Solar. And they feel the need to tell the rest of the investment community that, hey, the earnings outlook is going better. I could go over the numbers for next year as well, but you'll see the same trend. It's up, up, and up. This is very positive for a stock. Magnitude is just going through the roof.
All right.
Now let's look at woe-begotten Starwood Hotels, Zacks Rank of 5, and here we see the exact opposite thing occurring. So I've highlighted the trend of the estimates and the magnitude for the current next year. So 90 days ago, looking for $2.49 in the current year, and now looking at $2.23. That's about a 10% move to the downside. But even worse, if we take a look out to next year, what analysts were expecting, going from $2.95 all the way down to $2.34. That's a pretty significant move, and one of the reasons why the stock has dropped so greatly over the last few months.
All right, and it's kind of handy that all of those sections are labeled with the different factors.
Yeah,
so
it's
people
very.
know.
This section is very clear about what it's intended to tell you, which is the movement or trend in the earnings estimates in recent history.
But many investors prefer charts and other graphic representations of research, especially when it comes to stocks, over just a table of data. And I know that we have some charts on Zacks.com that perfectly illustrate the story of magnitude. Why don't you share those?
Yeah,
with us?
it's called the pricing consensus chart, and I'll be honest with you, I don't think we do a good enough job of sharing this chart with people, because for me, I don't buy a stock without taking a look at this chart, because for me, it really does tell the story about what is happening, and not just the trend of earnings over the last 90 days, this one is, but actually going back over, I think it's like a 5-year period that picture shows. So let's flash forward. Let's make sure everyone knows how to get to the price and consensus chart here.
Right.
So here again, I'm on a quote page. I go, or actually any research page, I go to the drop-down box, and instead of clicking on one of the other options, I'm going to go to in the chart section. You see I've highlighted price and consensus chart. So click on that, and now we see the price and consensus chart for First Solar. What you have here is you have a few different lines. The colored lines is the movement of earnings estimates over time. And the dark black line is the movement of the price. I think, if you see as many price and consensus charts as I have, and I highly recommend that you keep looking at them over time, you cannot deny the correlation between the movement of earnings estimates, the movement of stock prices over time. It is absolutely impossible when you see these charts over and over again and how they relate to each other. So here you see, since this stock first IPO'd back in late 2006, how earnings estimates have been on the rise almost the entire time. And look at the stock price. Sure, there were big dips. You see a big sell-off, but hey, look at the run that it made. It's got to take a little breather here. But here again, right back into an upward move. Why? Because earnings estimates continue to roll higher. This is a great way in which to interpret the long-term trend or magnitude of change of earnings estimates. And let's take a look at our friend Starwood Hotels, which is showing us quite the opposite. So you go all the way back to 2003, you see there are periods that the earnings estimates are going up for the firm, and sure enough, the stock price is going up as well. But we flash forward to the more recent information. I've kind of highlighted that area. Earnings estimates in about the middle of 2007 started to go down and continue to go down for a period of time. And look what happened with the stock price. You could have easily sold out in the 70s, $70, $75 per share last year. And now, if you had held on and not heeded the warning of earnings estimates and going lower, you're now sitting at about $35, $40 per share. So you've been about cut in half on this stock because you didn't heed what earnings estimates are. So price and consensus chart, an absolute must for anyone who's serious about using earnings estimates in the Zacks Rank.
What about cases where some quarterly estimates are being revised lower, yet the annual estimates are moving higher? First of all, why does that happen? Right. And second of all, which revisions are more important, the quarterly or the annual? Yeah,
this actually happens a lot more than you might expect, and it's because a lot of businesses are seasonal, or simply they just don't grow in a straight line quarter over quarter getting higher and higher. It all depends on, here again, seasonal effects, when new products get launched or when they have promotions, and maybe they're squeezing more sales into one quarter, which will not happen in a future quarter. So there's going to be a lot of movements in between the revenues and profits between quarters. The thing is, the Zacks Rank does not look at quarterly estimates. It looks at the current full year's estimate and next year's full year's estimate, which is really the big picture of what's happening with earnings, and that's where the focus should be. So quarterly movements, not as important as what the full year movement is happening.
All right, let's take this example then to the next level, if you will. What if current year estimates are headed lower and next year headed higher? How does that get reflected in the Zacks Rank?
Here, both years are important, but let's take the example of right now. Right now, we've just had a lot of companies report second quarter earnings. So in the current year, there's really only 2 quarters left. And next year, there are 4 full quarters of information. The Zacks Rank does take a look at the weighting of the 2 years that, here, this is 2 quarters in this year, 4 quarters in next year. You could say that next year is about twice as important in the magnitude changes and agreement changes for estimates and how it will be calculated for the Zacks Rank as the current year. And so which is more important? Well, they're all kind of important, But if the current year was being lowered a little bit and next year was being raised, it would be slightly more positive because next year has twice the weighting as the current year as things would work out right now.
All right. And last week, when we were talking about the factor of agreement,
yes,
you mentioned that the Zacks Rank uses a 60-day time window in which to review estimate revisions. You see, I do pay attention to
thank
these
you.
things. Does that apply to magnitude as well?
Yeah, it certainly does. And as we talked about last week, often customers are confused. They see their stock drop from a Zacks Rank of 1 to a 3, and yet earnings estimates did not fall. Why is that? And it's because we're only looking at the earnings estimates within a 60-day window. I'm going to repeat a little bit of what I went over last week, but the thing is, most earnings estimates come out right after a new earnings report. Earnings reports are 90 days apart. Okay, so as you can imagine, if a company, let's say on July 15th, comes out with an earnings report, within a week, all the analysts will have revised their estimates. And there may be no new estimates for a 60-day period, or maybe even a 90-day period until the next earnings report. So as you flash forward all the way to September 22nd, the 60-day window is still in effect. And the stock will probably be still a Zacks Rank of 1 because the analysts made their moves within that 60-day period. You roll forward to the next day, and now, as far as the Zacks Rank is concerned, there's been no upgrades and revisions. There's been no magnitude change, so no agreement, no magnitude, and we'll fall to a Zacks Rank of 3. That is not necessarily a bad scenario if you're a long-term investor. We're just going to wait and see what happens in the next earnings report.
All right, that's Steve Reitmeister, and the way he sees it on magnitude as an important factor in the four that make up the Zacks Rank. With Steve, I'm Terry Ruffalo.